In today's video, we are looking at what is the best type of life insurance for a federal employee and a federal retiree. We're looking at three options. We're looking at the Fegli, Federal Employee Group Life. We are looking at the Weipa, W-A-E-P-A, and we are looking at a private life insurance policy. Coming up next. Hey, my name is Mel Stubbs. I'm here on behalf of Retirement Benefits Institute, talking to federal employees about their retirement system, how to better plan for retirement. Today we're talking about life insurance. And I'm sure this isn't a great topic that a lot of people want to learn about, but it is important. Generally, as we're talking to people, there's three different life insurances that federal employees tend to go for. The first one is the Fegli, the Federal Employee Group Life Insurance. It's part of your benefits package, so a lot of people are signing up early on in their career. It's pretty cheap and they don't think about it again, but let's go through some of the details as you get closer to retirement. It could be important. So let's look at a report showing the details of Fegli. So here, this person is 48 years old. They're making $163,000. You have basic and they have 5 times the options. So there's almost $1 million of coverage here. You can see at age 48, the monthly premium is $180 a month. Now on your pay stub, it will be showing it per pay period. So you can see here it's $83 per pay period, but monthly it's $180. Just as a quick math note here, you don't take the $83 and just double it because there are 26 pay periods. So 2 months throughout the year, there will be 3 pay periods. So it's not just doubling the pay period price. So looking at this page in this report, this is a special provisions person. So they are retiring at the age of 49. Even though that's young for most people, the idea of how Fegli works is the same. At retirement, your basic gets really expensive. So during your career, basic stays the same price the whole time. Now it might trickle up a little bit as you get raises, but it does not jack up on you while working, only at retirement. So here at 49, when you see the $180 a month premium jumps to $534, that's because they've retired and the basic jacks up in price. Now, if you look here, when they turn age 50, the $534 a month jumps to $605 a month. Well, where does that jump come in? So your option B, you can get up to 5 times your salary. That changes every 5 years, whether you're working or whether you're retired. So, 35, 40, 45, 50, 55, every 5 years, the option B changes. Now, if you have a whole lot of Fegli life insurance, you have a whole lot of option B because basic is 1 times your salary. The options can be up to 5 times your salary. So every 5 years, it's getting more expensive. So if you just turned 45, if you just turned 50, if you just turned 55, you're going to want to look at your pay stub to see what the change was. What usually happens is people are getting raises and step increases and they don't feel the change, but when you go back and look, you can see it. So you see here at age 50, it jumps to $605. You come down, age 55, it's going to jump to $767 a month. I know these numbers are crazy, but this is what it would be if this person at this high 3 kept the insurance in retirement. Coming all the way down at age 60 and age 65, $1,200 a month and $1,300 a month. I mean, this is crazy expensive. So this just shows that Fegli, it has some things that are good about it. It has some things that aren't good about it. So the couple of things that are good about Fegli, one of them is you're approved. If you sign up, you get it. There's no health screening that you have to go through. Fegli is also good when you are younger. When you're 35 and under, it can be affordable and you can get a lot of insurance easily. Now, some of the drawbacks are, as you get older, the prices get a lot more expensive. So generally, people who are healthy want to go outside and get a private policy where it's based on their health and age because they can get something better. It kind of makes sense why Fegli would be expensive because anybody that's healthy is leaving. So most of the people that are staying are unhealthy, and it's just going to cost more because it ends up being where more unhealthy people stay. So good news is you don't have to qualify for it. If you already have it, you're approved. The bad news is every 5 years it gets more expensive. So generally people are either lowering the option Bs and getting less coverage to offset some of the costs, or they're canceling it. Now the dilemma is if you need insurance, then canceling is not a great alternative. And so if you need insurance, you want to get other insurance that is more affordable. If it hasn't gotten super expensive for you yet, this just shows you that it will. So if you know you need coverage into your 60s and into your 70s, a lot of times it makes sense to go ahead and get the coverage while you are younger and healthier. So now let's move on to the next option, which is Weipa, W-A-E-P-A. Here are some of the pros and cons here. It's cheaper for younger policyholders. You know, Fegli it is as well. But truthfully, all life insurance is cheaper for younger people. But that's a pro. You also can get some type of refunds each year. You can get more coverage for spouses and children than you can with Fegli. And you can kind of choose your coverage limits. So I guess there's a little more freedom on choosing some of your coverage limits. Now some of the cons, it gets more expensive for older policyholders, just like Fegli. The costs increase every 5 years, just like Fegli. You won't get covered if you're over 85, so there is an age limit. And so if you need coverage past 85, this also is not the greatest option. Now let's look at some side-by-side comparison of Weipa and Fegli. So maximum death benefits. Weipa, you can go up to 1.5 million. With Fegli, your limited is based on your yearly income. And you can have basic, which is 1 time your yearly income, and then option B up to 5 times. So you can have 6 times your income. With Weipa, you can have 1.5 million. You also can get a lot more coverage for your spouse and your children than what Fegli can do. There is some return of premium, accidental death benefits, some of those type things. Weipa might have a few more features. But if we look at the costs, so here in this slide you can see the average salary of a federal employee, and then assuming that you get basic through the federal government with Fegli, or you get Weipa. Now you can see on the Fegli side the price stays the same, because like we said, your basic stays the same while you're working. Doesn't matter how old you are, your price is the same until you retire. So on Weipa you can see it is cheaper than Fegli for the younger people, and as you get older it eventually gets more expensive. So that's something to keep in mind. The other thing with Weipa, as you get older, not only does it start to get more expensive, but they also start reducing your coverage where you can't have the $1 million at age 75 and 80. They won't let you. So one way they try to keep costs in play, instead of the cost going up to $1,300 a month like Fegli, what they do is they would keep reducing the amount of coverage. So instead of your premium continually going up, they just start halving your coverage, and then they half your coverage until eventually they limit the amount of coverage you can have. So both of these have some drawbacks. There's some limits with how much you can get. You can't get more than 6 times your salary with Fegli. You can't get more than 1.5 million with Weipa. You also can't lock in your premiums. The premiums adjust based on age. Well, in the outside market, you can go get a private insurance policy, and you can make these type of decisions. You can get the amount that you want. You can lock in the price, either for a term, 10-year, 15, 20, and depending on your age, you can go up to a 30-year term, where you can lock it in where the price is the same the full 30 years. You can't do that with the Fegli and the Weipa. You also can get a permanent policy, meaning it never runs out. So where term, if you get a 20-year term, you have coverage for 20 years. And in year 21, you don't have coverage. Now in year 21, you're also not paying for it. So you're covering a specific amount of time. If your needs only last a certain amount of time, this is a great way to cover it. You can lock in the price. It won't ever change during that time. Now, if you need something to last forever, so no matter when you die, it needs to pay. And we've got some other videos talking about survivor benefit and using life insurance to kind of cover some of the survivor benefit. In that instance, generally we're using a permanent policy that does not run out at all. So no matter when you die, it's going to pay, because that's what the survivor benefit does. No matter when you die, the survivor benefit pays. So if we're going to do an apples to apples comparison, you want to make sure the life insurance also lasts forever, so no matter when you die, it pays. Now on the permanent policies, you also get to lock the price in. So whatever the price in, it never changes. There's some living benefits, meaning if you ever need long-term care, you can access the death benefit to pay for it. Now we're not talking about you accessing the cash value, and these type of policies do build a cash value. I'm talking about you get to access the death benefit to pay for long-term care if you need it. And if you don't need it, then the death benefit is there for your beneficiaries. So the private policy on the outside has a lot more features. It has a lot more precision where you can get the amount you want. You can make it last for a certain amount of time that suits you. You can keep the premium the same during that time. If it's a term, the premium stays the same for the amount of the term. If it's a permanent, the premium stays the same forever. But you can kind of hone in and get the coverage you need for the amount of time you need, and you know what the price is going to be. There's not going to be future price increases that can knock you out where it makes it where it's hard to afford it. So these are generally the three that you can get. On the Fegli side, you can cancel Fegli at any time. So if you are going to get a private policy on the outside, make sure you get it approved, get it in force, then cancel. Don't get so excited about life insurance that you cancel your Fegli, then you go get approved and you get denied. And so the benefits of the outside policy, where you can lock your premium in, it doesn't change, you can get the coverage you want, you have a lot more options. If there's a drawback, the premium is based on your health and your age. So if your health is not good enough in life insurance terms to get life insurance coverage, then that's a big drawback. And so you want to make sure you get approved first, find the policy that you like first, get it set, then turn in the form to cancel your Fegli if that's what you want to do. If you need help with this type of stuff, reach out to retireinstitute.com. Talk to us. We'd love to go through some of the options that you have available to you, because we want to make sure you're using your money wisely. You are a steward of the money that you have, and so if you need insurance, then you need it. But let's make sure you're getting the best kind that suits you and your family's needs. My name is Mel Stubbs. I will talk to you next time.